Hello and welcome. You're watching Bloomberg Quint live. Let's take a look at how markets have fared this week. And we have had a relatively volatile week, but we did see the indices end with gains of as much as 1%. And among the key gainers, we had Adani Ports rise, along with Z Entertainment and Indiabulls Housing Finance, as you can see. We had some gains in GAIL and UPL as well. But a lot of weakness in Hero MotoCorp after a brokerage downgrade for the company, citing some headwinds in the near term. Coal India, BPCL and JSW Steel, among others, which lost out through the course of the week. But the momentum was with the gainers, as we saw in the NSE 500 as well. So when it comes to the broader markets too, there were more gainers and momentum was with the gainers as compared to the losers. The index, of course, advanced by around 0.8%, with GET&D India standing out in trade, essentially on the back of the big order win that its consortium has won, the consortium that it leads. REC, Supreme Industries and ILFS Transportation also advancing in trade, even though ILFS Transportation did decline to a certain extent today. But on the losing end, you have weakness in AU Small Finance. Future Retail, along with a handful of future group stocks, did come off to a certain extent. Navkar Corp, what really stands out is also something like an Info Edge India, which declined by around 8.2%. And of course, some usual suspects like 8K Miles Software. But what were some of those factors that actually determined the week and perhaps the course for the markets? Let's start off by taking a look at Monday, the 24th of December, where we did have Radiant Life, which announced the acquisition of 49.7% stake in Max Healthcare from the South African-based Life Healthcare, and in an all-cash deal. That, of course, and across in the globe, the United States markets ended Christmas Eve on a somber note, and actually wasn't somber, it was quite a bad note, with the benchmark indices posting the sharpest intraday fall in 9 years. Markets were closed on the 25th of December on account of Christmas celebrations, but moving on to Wednesday, the 26th of December, the Reserve Bank of India set up a panel headed by former RBI Governor Bimal Jalan to review its economic capital framework. On Thursday, the 27th of December, 6 out of the 11 public sector banks under RBI's prompt corrective action framework said that they would receive funds from the government. That's the latest round of bank recapitalization by the Modi government. Of course, Bank of India stands out there with the largest amount being allocated at around 10,000 crores. And the government also released the fiscal deficit data for the month of November. The gap widened further to around 7.16 lakh crores, or nearly 115% of the full year target. And today, we had news from Lemon Tree Hotels, which announced that it has entered into a joint venture with an affiliate of Warburg Pincus, and the venture will focus on creating co-living spaces. Now, that's as far as the week that's gone by, but the real question is, how are we stacked up with respect to the different levels on a technical basis, or perhaps the kind of cues that the futures and options markets are throwing up? And at this point in time, if we can pull out the open interest distribution, Max OI currently stands at the 10,500 put, and on the upper end it kind of moves within 11,000 and 11,200. Of course, this is early days in the January series, so we're going to have to keep an eye on how the range moves on the upper end. But for the lower end, it is cemented more or less at the 10,500 for now in the near term. So those are some of those other variables that we are keeping an eye on. But let's also take a look at what are the key levels that our technical analysts are watching as we move into trade next week.
For Nifty, the trend is expected to be stronger in coming days. I would not recommend buying here for the reason that we have had a breakout above levels of 10,815, 820, and we are up by 60, 70 points already. So here the risk reward will be skewed. You play for targets of 10,950, 960 on a very immediate basis. The stop loss for that would be 10,800 or maybe sub 10,800. So the risk reward would not be that suitable.
At this point of time, we should not take a fresh trade from here, and in fact we should observe how the Nifty is behaving around the mark of 11,000, and if at all there is a sign of a reversal, I think then there will be a good trade to go short on the market. For the Bank Nifty also a very similar view. 27,500 is a very strong resistance, and unless until we see a breakout happening from there, I think we should avoid. So the strategy should be to hold the trades with a trailing stop loss. So the support levels are very important on both the indices. 10,800 for Nifty and 27,000 for Bank Nifty should be the trailing stop loss, which should be held on as a important level. And once that is breached, then I think we can think of coming out from the long trades. And till then, we can remain stock specific.
Right, so what's lined up for next week? What should we watch out for as we move into trade in the upcoming week? And of course, that will also have the final day of the trading year. And core sector data, of course, is one of the key watchables from the macro standpoint. But moving on, we also have the global markets, which will be shut on the 1st of January. But our markets are open, and we may have a little bit of traction in our markets. Of course, don't forget, the Nikkei India manufacturing PMI will also be released on Tuesday the 1st, so keep an eye on that. But it is the 1st of the month, so we will also have the December auto sales data coming through, and that perhaps can shed some more light in the kind of trends that we're seeing with respect to volumes for the automotive index. Nikkei India services PMI also gets announced on Friday, so that's as far as the week is concerned. But given the fact that this is the last Friday of 2018, well, my producers and I thought that it would be a good idea to give you a picture of what we can expect for the year ahead. So if we can bring that up, firstly, of course, towards the first week of February, we will have vote on accounts. That will largely be an interim budget of sorts for the government. Of course, February will also have the monetary policy decision, and we have a lot of friction, should I say, between the government and the Reserve Bank of India. Of course, we also have a new governor now, and of course, that will also perhaps play to a certain extent on and bear down on general elections. General elections, of course, March onwards, so that will also be a very exciting time for all of us, and we will have more influence on the monetary policy again in April. And well, among the other factors, we're also going to watch out for the election outcome. Of course, we are going to keep an eye on that. That perhaps is the most important event in the upcoming year, the general elections of 2019. So watch out for a whole host of these events and how they actually influence our own markets. We'll be keeping an eye on that one. But with that, it's a wrap on the markets. But before we conclude this edition of the Markets Wrap, what is Elara Capital's Ravi Sundar Muthukrishnan telling us about the year ahead? This is what he's saying. Listen in.
Right now, the volatility exists, and my sense it will continue to exist for at least a month or so, because I think that Indian markets are fairly correlated with the US markets. And the trouble in the US markets doesn't seem to be going away pretty soon. So from that sense, if you see, then India will also be volatile for some time. The second phase is the phase between January to May, where I think irrespective of what the fundamentals are, irrespective of how companies do, I think the political scenario will take center stage. All the guessings about which party will come to power will be in the minds of investors. So nothing would matter in the next 6 months post-January, primarily because earlier what would have happened probably is maybe 2 years back when BJP was doing very well, people thought 2019 was a certainty for BJP. But with the state elections happening now, with a strong united opposition coming together, it's not going to be as easy as one would have thought it to be. So the guessing game will be there till May. Post that, I think the fundamentals will take on.
Well, politics will take a center stage. That's how every market participant is going to see and its implications on the markets. And with that, it's a wrap on the weekly market wrap, but there's lots more lined up, so stay tuned to Bloomberg.